Property tax bills are set to soar for Colorado homeowners this year. If that's you, I'd bet you don't even know how your property taxes are calculated, much less why they're going up so much. If you watch this video, you'll learn the 3 variables that impact your property tax liability and which of those local and state elected officials can control. And if you watch until the end, I'll walk you through the 3.5-year cycle for determining your property taxes, from valuing your home to paying your property tax bill. In Colorado, 3 different factors determine a home's property tax. First, the actual market value of your home. Second, the state assessment rate. And third, the local mill levies. Now, assessors in Colorado look at the sale of comparable homes in your neighborhood over an 18-month period. For the 2023 and 2024 tax years, that 18-month period spans from January 1st, 2021 to June 30th, 2022. Now, in Colorado, home prices peaked around May of 2022, right at the end of that valuation period. That means for a lot of homeowners, when they receive their notice of valuation in the mail, it's going to show the value of their home a little higher than what they could actually sell it for today. Now, each year when you receive your notice of valuation, you'll have between May 1st and June 1st to appeal the valuation with your assessor. Valuations are certified and locked in on August 25th. The state of Colorado does not levy or collect property taxes. Instead, they determine the portion of your property's value that's subject to local tax. Now, local taxing authorities, in order to apply their local tax rate, must first determine your assessed value. Now, the assessed value of the home is not the same as your actual market value of your home. The assessed value is only a fraction of the actual value of your home. So, for example, in 2020, the assessment rate was 7.15%. So to determine the assessed value, you would multiply 7.15% to the value of your home. Take, for example, in 2020, a home worth $380,000. You would multiply $380,000 by 7.15% to come up with a $27,000 assessed value. Local taxing authorities that would then apply their tax rate, or what they call mills, to your $27,000 assessed value. The assessment rate is set in statute at the state level and applies the same to all single-family homes across the state. Now, typically, the state legislature sets the assessment rate, but it can also be dictated by a constitutional amendment or a citizen ballot initiative. Property taxes are ultimately levied and collected by multiple local governing bodies that have taxing authority over your home. These taxes are called mill levies, or mills. Multiple local government entities have the authority to levy mills against your home to fund public programs. Now, if you look at an example here, you'll see that your county may issue 6.091 mills. The city may issue 4.944 mills. The school district may issue 36, and so on for different local taxing authorities. In this example, the person's home is subject to a total of 85 mills for the various taxing authorities. If 85 mills are levied on your home, then you'll pay a total of 8.5% in taxes on the assessed value of your home to various local taxing authorities. To recap, there are 3 variables that impact your property tax bill. The first is the actual value of the home. Now, this is going to be controlled by the housing market. The second is the state assessment rate. That's going to be controlled by the state legislature, or as I said, it can be controlled in the state constitution or by a citizen ballot measure. The third is the number of mills levied by local taxing authorities. That is controlled by various local governments that have the authority to impose a tax or mills on your property. Now that you understand the 3 variables that determine your property taxes, let's take a look at some examples of how these variables can impact your property tax bill. In our first example, you have an actual property value of $400,000 and an assessment rate of 7.15%. So that's a multiplication factor of 0.0715. So this is something you might have seen back in 2021 and 2022, when the assessment period running from 2019 to 2020, median value of a home in Colorado might have been around $400,000 as an estimate. This would have brought our assessed value to $28,600. Now, average mills in Colorado are around 85 mills, but this can vary from county to county or from house to house across the state. But let's just use 85 mills. So if you take the assessed value of $28,600 and apply 85 mils, that's an 8.5% tax rate, that gives you a tax liability, a property tax bill of $2,430. Now, let's change the first factor, the actual property value. In the new assessment period that we're about to have that goes from January 1st, 2021 through June 30th, 2022, the median home price in Colorado is going to come up to somewhere around $560,000. With just a higher property value, you now have the same assessment rate and the same mill levy. It puts your property tax bill at $3,400. Now let's look at how we can adjust some of these other variables in order to impact the ultimate tax bill that we see in these examples. To keep property tax bills the same as home values rise, either the state must reduce the assessment rate, local taxing authorities must reduce the mills levied, or a combination of these. Take a look at this in the next example. Again, we have a home valued at $560,000. But if we want to have the same property tax bill that we did back here with a $400,000 home, we would need to lower the assessment rate to 5.107%. Now, keeping mill levies the same, this lower assessment rate would give us about the same property tax bill that we had here, even though our home value has gone up. Again, we can do the same thing with a decrease in the mill levy. Again, looking at a $560,000 home, let's keep the assessment rate the same at 7.15%, and instead decrease the mills that are levied on the home. Now, this would be 60 mills, and that would give us about the same property tax bill of $2,400. In the last example, we can do a combination of adjusting the assessment rate controlled by the state and adjusting the mills controlled by local governing authorities. Again, with a home value of $560,000, we have an assessment rate of 0.06 in this example. Local governing authorities would have to reduce your mills to just 72 mills in order to have about the same tax liability on a $560,000 home that you did back when your home was only worth $400,000. So now that you understand property taxes in Colorado, I'm going to walk you through the 3.5-year cycle for property taxes from valuing your home all the way to paying your tax bill. Let's take a look. The assessment period for the current tax year, 2023, runs from January 1st, 2021 to June 30th, 2022. So property valuations for tax years 2023 and for tax year 2024 are based on home sales during this time. Now, home values are reassessed every 2 years. So the reassessment period from 2021 to 2022 will apply to tax years 2023 and 2024. What you see here is a chart by the Federal Reserve Bank of St. Louis that measures the change in housing prices for the Denver metro area. This is a housing price index. You can see back here, this is the peak of the housing market in 2006 that led to the Great Recession. As you can see, housing prices fell and bottomed out during the Great Recession, and they've been rising significantly since then. Now, this right here, this little gray area, is the little recession that we had as a result of the COVID-19 pandemic. But what you're going to see is that the assessment period that is going out in notices of valuation this spring in 2023 are based on this period right here. So your county assessors will be looking at sales of homes during this period right here to determine the full actual value and then applying the assessment rate to that value based on this surge in housing prices. Now, this is one of the factors that's determining why property taxes are rising so much in Colorado, because home values, actual home values, rose a lot over the assessment period that assessors will be looking at when they determine your actual property value. Now, the next date to know is May 1st. May 1st is the deadline for taxpayers to receive notices of valuation for tax year 2023. After that, you'll have this span of time between May 1st and June 1st to appeal that valuation if you don't agree with it, and your assessor will hear those appeals. Next, you have August 25th, 2023. That's when the valuations are certified, as I mentioned earlier. And then on December 22nd, 2023, local mill levies are certified. If you own a property on January 1st, 2024, it will be subject to 2023 property taxes based on all the things that we just looked at on this chart here. And then finally, April 30th, 2024 is when your 2023 property taxes are due, assuming that you're paying in full. The dates are a little different if you're paying in 2 installments. Now, there's a lot more to taxation and property taxes than what I've explained in this video. There are property tax exemptions for seniors, for example, and other provisions in the tax code that you would need to know for a thorough understanding of how property taxes work in Colorado. For more specific advice on your property taxes, I recommend speaking to an accountant or a personal tax advisor. But hopefully this video gave you an overview of how taxes in Colorado on property generally works. Now, if you like this content, I'd ask that you subscribe and hit the bell icon so you can get notified when more videos like this come out. I'm going to be doing a video series on the policy decisions that have been made over the last several years that have impacted property taxes and have put us in the situation we're in today. So remember this, knowledge is power, but if knowledge is power, then ignorance is servitude. If you like this content, hit the like button to let YouTube know that you like what we're doing here, that you want to see more so that I can bring you and other Coloradans more knowledge like this.